Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at SteveSaretsky.com. Welcome back to the show, Steve.
Yeah, always a pleasure. Thanks for having me on.
Steve, how many months of inventory are currently in the luxury housing market?
Yeah, so as of right now, if you look across the greater Vancouver housing market for homes that are priced above $3 million and up, you have, I believe it's 41 months of inventory for sale. So inventory in that segment continues to build, primarily not because of a flood of new listings, but what you have is just very few home sales, and that's just allowing inventory to stale and accumulate.
Is the luxury housing market a bellwether for the rest of the housing market?
Yeah. So, I mean, typically what you see in housing markets tends to be the luxury market that kind of goes first. Generally, a lot of the, I guess, smarter or institutional money that sort of peters out, and they sort of see the cycle coming, or prices get overvalued, and then they start to withdraw a lot of their capital. And I think that's sort of what we're seeing here in Vancouver, is that money really peaked out sort of back in 2016, and since then it's been gradually slowing, and that slowdown has been exacerbated through a tightening of credit, tightening of Chinese capital outflows, as well as increased taxation on those luxury properties. We have increased property transfer tax, a school tax, as well as a BC speculation tax, which was just brought in at the start of this year. So you have a combination of all those factors are weighing on that luxury property market. And, when that does, it's sort of the old adage of trickle-down economics. As these luxury homes get reduced significantly, it doesn't make as much sense now all of a sudden to be paying for, say an average home or even a two-bedroom condo, et cetera. It all starts to eventually work its way and filter down.
In the condo market, there are certain areas of the city where sales are still good?
Yeah, I mean, I wouldn't say the sales are good. The sales are weak, basically across all of Greater Vancouver, even in the Fraser Valley. But there's certain pockets that I think are performing a little bit better. I look at, maybe the Surrey condo market, I think, is doing better than maybe most of the other markets. I think that's primarily because you have a lot of migration moving towards Surrey, particularly with their SkyTrain system that they got set up there. Increased density, and there's a lot of job growth going there. So it's not maybe one of those areas that necessarily impacted quite as much, but it is still slowing significantly.
Well, 1,000 people a month move to Surrey.
Yeah.
They have to live somewhere, right?
Yeah, it makes sense. So they're definitely building a lot there, so it's going to be interesting to see how that market transitions here over the next 12 months.
At what point does the months of inventory tilt to favor the buyers or the sellers?
Yeah, so generally anything that's considered between 4 to 6 months is considered a balanced market. That's generally when it's even keel. Anything below 4 months is considered a seller's market. So obviously anytime you get over 6 months, that starts to put downwards pressure on prices. At least it gives the upper hand in negotiations for buyers. And so we've seen the condo market push above 6 months. I think it's around 8 or 9 months right now. And then obviously the luxury market is the most impacted right now, just because there's so few buyers at that price point. Very few buyers that can actually afford $3-4 million properties, particularly when you start to restrict foreign capital. So that's why the months of inventory has crept up to 41 months of inventory.
Are the months of inventory stats a good indicator during the forming of a real estate bubble and the subsequent bursting of that bubble? Yeah,
I think it's definitely a good indicator because, real estate markets are extremely slow moving. I think there's a misperception among a lot of people that maybe aren't in the industry that look at real estate and, almost compare it to, say, a stock market where the prices should fluctuate on like a month-to-month basis. But what happens in real estate is generally the sales slow significantly. They drop off. That allows the inventory to slowly creep up, and then over time that weighs on prices. So there's been research out there that ultimately suggests sales will peak out 2 years prior to seeing price declines. And I think that's pretty evident in the detached market. The sales volumes for the luxury peaked out sort of end of 2015. And since then, we've only really started to see significant drops in values over the last 12 months.
We'll have more with Steve Saretsky right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Steve Saretsky. Steve, as sales slow and prices drop, do months of inventory numbers decrease due to people taking their properties off the market with the hope of relisting in a stronger spring market?
I wouldn't say the months of inventory would decrease, but what we tend to see is the new listings are actually probably, I would say, a little bit weaker than I guess, normal levels. I think people are taking their homes off the market. Definitely seeing it widespread. They're taking their home off the market out of frustration. So what you're seeing, and some of these sellers have been doing this now for a year and a half, where you might have listed, say, in the spring of 2018. It didn't work out for you, so you took it off the market. Said, well, the fall will pick up. Let's try in fall. And fall didn't work, so now you take it off again. You say maybe spring 2019 is my year. And so you're starting to see some of them come back on the market again. But again, the conditions over that time frame have not improved. They've actually gotten worse. And so a lot of these sellers actually would have been better off just taking a slightly reduced price a year ago as opposed to delaying that that listing. And so I'm still seeing that with a lot of new construction and single-family housing market where these developers or builders have built a speculative single-family home. That means there's no purchaser. They just built a brand new home. They've listed it at a high price where they can make a profit. It didn't sell. Now it's been on the market for 8, 9, 10 months. Still not selling. They've dropped the price down to a price where they're at basically a break-even or a slight loss. It's still not selling because the market still perceives it as being priced too high. But some of these guys are ultimately not willing to accept a loss on a new construction home. And so what they do is they'll actually rent it out for a year. I've seen a lot of developers doing that, where they're going to rent this house out for 1 year. But again, now you're just hoping and praying that the market is going to be in better shape or condition in 12 months' time. And there's really no guarantee that in 12 months' time that the prices will rebound to a level where, these guys can make a profit, particularly in the luxury segment. If you study historical housing booms and busts, is sometimes these luxury housing markets could take years to come back. And in some cases in the U.S., 10 years.
Is there a global market slowdown, and is this where the governments try to influence markets through regulation?
Yeah, there's definitely a global slowdown that's prevalent. I mean, a lot of the Eurozone is obviously teetering in a recession. China's slowed down. They've just pumped a massive stimulus in January, trying to get their economy out of a funk there. So that's all slowing global growth. And unfortunately, with policymakers, I can speak specifically here in BC, is generally they're always late to the party. So we brought in the stress test after the market had basically peaked. We brought in now a BC speculation tax, well into a market correction here. So governments always come in, they're always reactionary, they're not proactive. So they react to the market and they react to voters, and what we're seeing here is a reactionary policies coming at ultimately the wrong time. But there's a huge political appetite, at least, to keep these policies in place. And so I expect them to remain in place. I mean, you look at the BC speculation tax that was just brought in at the start of this year, despite the obvious turmoil in the market. So that's going to remain in place. But I think evidently at some point the corrections will become, or the pain will become too great to simply ignore, and some of these policies will ultimately be reversed.
Are they punishing people who have vacation property with this tax?
Yeah, it's definitely, I would say, geared towards that. They want to, I look at it more as somewhat of a wealth tax. It's definitely, I would call it almost like a satellite family or a wealth tax, where basically, hey, the motto is if you're not earning an income and paying your income tax in BC, then we will tax you on your real estate. That's basically how this tax is laid out. And again, there is some political appetite for that. Obviously, I think we have an increasing wealth inequality. There's been a lot of people that have been left behind through rising home price inflation, where wage growth simply hasn't been able to keep up with that. And so there's a lot of political angst, and as shocking as this sort of policy may be, which is, I think, very egregious wealth tax, is there's a lot of political support for it. So, whether you agree with the tax or not, it doesn't really matter, because at the end of the day, I think you could see this sort of policy coming from a mile away, because this is how governments always react when there's a sort of social unrest and a rising wealth inequality.
A lot of people own those properties, say they're uninsulated little cottages that are unsuitable to be used in the wintertime. What about that? They can't rent it out.
Yeah, I think the government's stance on that is sort of tough love. And, you can look at certainly a vacation home. Obviously, again, it depends on your political viewpoints on this, but I think a lot of people that have vacation homes, they feel that they've worked hard and earned their wealth to have the ability to own a second home, whereas you have the other camp that's just struggling to even put a roof over the head. They're in the camp that, hey, if I can't even afford a home, who's to say that you should be able to afford two homes? And so it's really ultimately I think it's just a huge divide in the social classes between the have and the have-not. A decade here of loose monetary policy that's inflated asset prices well beyond wage growth has certainly left a good chunk of the population behind, and so there's a growing angst towards the wealthy, and that is people with two homes.
Sounds more like a jealousy tax than a speculation tax.
Yeah, I don't want to get too much into the political side of things, because you can't win. You can't win the argument. I have clients on both sides of it. Some absolutely think it's egregious and hate it, and then you have other clients that are all for it, think that home prices should return to reflect local incomes. But I think if that becomes a reality, there'll be substantial pain in the process when you reduce that sort of capital inflow and investment into the province. I think you're going to start to see an uptick here in job losses.
Right. So much of the economy depends on real estate sales.
Yeah, that's
carpenters, electricians, plumbers.
Yeah, exactly. Unfortunately, you can agree with it or disagree with it, but unfortunately, that's how the BC economy has been built. Certainly, I think everyone would like to see perhaps a more sustainable means of growing the economy, as opposed to just selling each other more and more expensive homes. But ultimately, this is what we've built our economy on. I think construction and real estate makes up about 24-25% of GDP. So if you start reducing, we have home sales at a 10-year low here. At some point, we haven't quite seen it. This is going to begin to significantly weigh on jobs in the profession, and the drag-on effects of that, construction, retail spending, etc.
We'll have more with Steve Saretsky right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are Bank of Canada future rate hikes likely to depend more on what the Fed in the U.S. does than what the Canadian economy does?
Yeah, I mean, it's a huge, Bank of Canada generally tends to follow the U.S. Federal Reserve. It's going to be interesting to see. I mean, obviously the consensus is still, for at least amongst the mainstream economists and journalists, is that we're still going to see multiple rate hikes here in 2019. But the bond market is certainly not pricing that in. They're actually, I think there's greater odds at this point of a price cut or a interest rate cut than an interest rate hike. And that certainly seems, that's my viewpoint of it anyways. I think growth, not only global growth, U.S. growth, but particularly Canadian growth is slowing substantially. I think estimates suggest that Q4 GDP will come in around 1% growth. So it's a significant slowdown. And part of that is because real estate, which is a huge driver of our economy, has just been slammed on the brakes.
Are mortgage rates in Canada based on the Bank of Canada rate or the bond market?
I would say more of it has to do with the bond market. That's really what prices in, particularly your 5-year fixed mortgage rates, which is what the majority of people are on. Obviously, your prime rate or your variable will be more tied to what the Bank of Canada does with their overnight interest rate. But yeah, for the most part, you want to be looking to the bond market as a precursor of where rates are going.
Regardless of where mortgage rates go, are the banks likely to continue to favor conservative lending practices?
Yeah, we've already seen significant tightening in lending, without a doubt. So, I mean, not only through the mortgage stress test, but there's no question a bit of a risk premium being sort of baked into the cake right now, where you've seen the 5-year Canada government bond plunge, I think 60, 70 basis points, and the banks have only cut their 5-year fixed mortgage rate by about 10 basis points. So they're definitely more conservative in their lending. Particularly what I'm hearing on the feet on the ground is through construction lending. We're being much more conservative on that aspect. And obviously, if market conditions continue to deteriorate, then these banks and these lenders will continue to contract their lending, and that ultimately just makes things even worse. So again, that's the old adage that a banker will give you an umbrella on a sunny day and take it away when it rains. Generally, when you need credit or you need bank lending the most, is typically when it's not there. So generally, in order to counteract a decline in home prices, one would hope that the banks counteract that by increasing their lendings to sort of offset the price decline. But what happens is the banks ultimately act as any other investor would. When conditions start to deteriorate, they get nervous and they contract their lending even more. Steve,
thank you so much for being on the show.
Yeah, thanks a lot. That was a good time.
My guest has been Steve Saretsky. He's a Vancouver-based realtor, online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.